Stocks close mixed on Wall Street. The Nasdaq hits an all-time high on hopes of the Fed cutting rates soon. The S&P 500 also closes higher, while the Dow Jones Index closes with losses. Asian markets trade largely lower despite a largely bullish handover from Wall Street. The GIFT Nifty is also indicating a higher start for the Indian markets. Gold surges to a record high to above $2,400 an ounce. Silver too hits an 11-year high as Fed rate cut expectations lend support. Copper prices also hit a record high above $11,000 a ton on expectations of shortages in supply. India's banking sector reports a combined annual profit of over 3 lakh crore rupees for the first time in FY24. PSU banks report a combined annual profit of 1.41 lakh crore rupees. Prime Minister Modi calls it a remarkable turnaround in the last 10 years. And the chief prosecutor at the International Criminal Court seeks arrest warrants against Israel's Prime Minister Benjamin Netanyahu and the leader of Hamas, Yahya Sinwar, accuses the Israeli and Hamas leadership of war crimes and crimes against humanity. US President Joe Biden sides with the Israeli Prime Minister, calling the request for a warrant against him to be outrageous. We are back after the trading holiday, and it's a Tuesday morning. You're watching Power Breakfast here on CNBC TV18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets have opened this morning. It's a slightly mixed picture there. Most of the Asian indices are trading lower this morning. As you can see, the Hang Seng is down almost 1%, and Hang Seng among the Asian indices has been among the best performers in the last month or so as we speak. The Taiwanese index is also trading lower by 0.25%. Some data coming in from South Korea as well, where the consumer sentiment has dropped to the lowest level in 6 months in the month of May. And the only positive market in the across the Asia Pacific is the Japanese markets, with both the Nikkei and the Topix trading with gains of almost 0.25% to 0.5% this morning. So most of the Asian markets are trading with losses, but the Japanese indices appear to be bucking the trend this morning. And the tech stocks are leading the gains in Japan as well after the positive handover that came in from Wall Street, courtesy the Nasdaq. Pull up the GIFT Nifty as well. That is also indicating a slightly positive start for our own markets. A 63-point implied open, a 63-point uptick for our own markets. So a fourth straight day of a positive start likely for the Nifty. We've had a good last week, recovering most of the losses that we had in the week gone by. So the GIFT Nifty is also indicating a positive start for our own market. So positive handover from Wall Street. Asia is slightly mixed, but the GIFT Nifty is indicating a positive start. But moving on to Wall Street now, and it was a mixed close to Monday's session there, with the Dow Jones slipping close to 200 points, dragged by JP Morgan. The S&P 500 closed near the flat line with a marginal gain. However, the tech-heavy Nasdaq closed at a record, powered by Nvidia and other tech companies. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Markets ended the day mixed as the Nasdaq closed at a fresh record high, powered by gains in chipmaker Nvidia and other tech companies. The Dow falling 197 points, the S&P 500 managing to inch up 5, while the tech-heavy Nasdaq gained 109 points. Microsoft unveiled new computers today that have artificial intelligence chips from Qualcomm. The Copilot Plus PCs will be available to translate audio, recommend responses to messages, and suggest changes in the Settings app, among other capabilities. Computers start at about $1,000. Microsoft started accepting pre-orders Monday, with deliveries expected in June. Meantime, other computer makers, including Dell and Samsung, are also launching AI-ready PCs powered by Qualcomm chips. They promise longer battery life and will run Microsoft's Copilot AI chatbot. Shares of telehealth company Hims and Hers, known more often as just Hims, surging on Monday after the company announced that it's going to start offering a compounded version of the extremely popular GLP-1 weight loss injections like Wegovy and Mounjaro for just $199 a month. Compounded drugs are made by generic drug manufacturers and are not reviewed by the FDA for safety or efficacy. Hims & Hers says it plans to make branded options available to customers once supply is consistently available. That's what's happening here in the U.S. Back over to you in Mumbai.
Bursa Coombs there with the wrap on Wall Street. But staying in the US market, shares of JP Morgan, which were the biggest drag on the Dow Jones, slipped over 4.5% in trade after CEO Jamie Dimon said that his retirement may be sooner than previously stated. He also said that the bank will not repurchase shares at the current levels. Speaking at the bank's annual investment meeting, Jamie Dimon said that he is cautiously pessimistic about the current macro environment. Listen in.
And what has me, I'm cautiously pessimistic. I think pipelines come and go. I think interest rates go up and go down. I think there are long-term trends and short-term trends. I'm cautiously pessimistic. We have the most complicated geopolitical situation that most of us seen since World War II, if you study history. We don't really know the full effect of QT. I find it mysterious that somehow it had this beneficial effect, but it's not going to have a negative effect when it goes away. And I personally think that inflation may be a little stickier than people think, and that rates may surprise people.
And staying with the US markets, the Dow Jones topped the 40,000 mark last Friday. The Nasdaq is at a record high. So what next for the US equities? Listen in to some important opinion coming in from BofA Global Research's Jill Carey-Hall on the setup, the earnings backdrop, and more. Listen in.
I mean, I think we still see upside from here. Equity sentiment has definitely improved. It's not yet euphoric. I think there are pockets of the market where we see more opportunity than others. We've still been in a very good earnings backdrop, continued to surprise to the upside this quarter. But we do think that earnings for the market are starting to broaden out, and that should continue as we get into the latter part of this year. So as some of the Magnificent Seven stocks, some of the big tech stocks start to spend more on CapEx, their earnings growth should start to slow, and earnings for the rest of the market, we think will catch up by the end of this year.
Now, consumer price inflation eased in the month of April. However, US consumer sentiment hit a 6-month low as households worried about the higher cost of living and unemployment. Amidst this mixed data signals, all eyes are on the US Fed's next meeting scheduled for the 11th and the 12th of June. Bank of America's Aditya Bhave rules out rate cuts in the near term, but thinks that the Fed could cut rates in December. Listen in.
Rationale there would be that the mix of inflation hopefully looks more favorable by December, with slower inflation in services perhaps offset by a little bit of a pickup in goods inflation. But by that, I mean less deflation in goods. So going from, let's say, a negative 2-3% rate on core goods, which we know isn't really sustainable, to, let's say, -1. But the key for the Fed is services. I don't think core services inflation is accelerating. I would say it has been stickier than expected. It's still very elevated from the Fed's perspective, and you're seeing evidence that some of that is being driven by demand, which is why we think for now cuts are off the table. The risks to our December call are definitely for a delay, but for now we remain comfortable with the idea that services inflation will be low enough by December that they can cut.
That's all the global market action that we have. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news this morning. First up, Sudarshan joins in to get us all the market cues that we need to watch out for. Sudarshan, good morning. It's a positive handover from Wall Street, but what are you picking up this morning?
Good morning, Hormas. Before I talk about the market, let me talk a little bit about the elections that are ongoing. So we are nearing the close of this 2-month-long Lok Sabha elections 2024, and with yesterday's 5th phase, voting on 80% of total 543 seats has been completed, and voter turnout so far has largely been the same as that we saw in 2019. Cumulatively, total turnout in 2024 as of now stands at 66% against 67% that we saw in 2019. Now let's shift to market. Last few sessions have been good. Nifty is now back at 22,500 and gains have been broad-based. But what has been catching attention is the mid-cap outperformance. Last week, mid-cap index surged more than 4% to record its biggest weekly gain in last 8 months, that is since September 2023. And on Friday, and this can easily be corroborated by the sudden buying that we have seen in by FIs. On Friday, after selling for 11 sessions and shares worth rupees 33,000 crore, FIs turned buyers on Friday, but again on Saturday, both FIs and DIs were net sellers, but there is nothing much to read from that because volumes were very thin. On stock-specific moves, the focus has been on earnings. Even on Saturday, despite thin volumes, we saw major moves in some names like Balkrishna Industries, Zydus Life, Z Entertainment, Astral and HL. Now coming to global cues, there is not much from the equity front. Last 2 days on the Wall Street has been range-bound. On Monday, we saw Dow and S&P close with minor changes, while Nasdaq has hit record high. But the major moves we are seeing in commodities. Gold is back over $2400. Copper has crossed March levels to hit record high. Crude, though, has remained steady, and Brent is below $84 per barrel. Lastly, in stocks to watch, keep an eye on stocks that will be in focus ahead of earnings. Those are BHL and PI Industry and companies that have reported earnings on Monday, and some of them are City Union Bank, Deepak Nitrite and BEL.
Sudarshan, thanks a lot for all of those updates. Now over to Vamakshi, who would list out the stocks that you need to watch out for. Vamakshi, good morning. What do you have on your list?
Well, good morning, Hormaz. A lot of numbers in focus. Let me first start off with the Jeevan Small Finance Bank. The merger has aided strong top-line growth for the company. Net interest income has seen an uptick of 26%. The net profit has grown by 6.5%, but the asset quality for the bank has deteriorated, with net NPA deteriorating from 0.17% to 0.28% sequentially. In fact, the company has also given its FY25 guidance, wherein they're saying that loan growth of almost 25% is what they expect. SAIL, on the other hand, has reported a downtick of almost 3% in its sales volume. Adjusted EBITDA came in at 1,954 crores, down 33%, but this is still better than what the street was expecting. The company also reported an exceptional loss of 502 crores in the fourth quarter on account of settlement of government taxes under the Vivad Se Vishwas scheme, as well as the entry-level taxes, and the net profit declined by nearly 3%. India Cements reported a weak set of results, but there was some improvement seen in the utilization levels for the company. Revenue was down 14.7%. They also witnessed a volume degrowth of 13%, mainly on account of working capital constraints. But this time around, they've managed to report an EBITDA of 47 crores as compared to an EBITDA loss of 44 crores. The net loss of almost 30 crores is what the company has reported. This has narrowed down as compared to the loss seen in the same quarter last year. Patel Engineering reported good operational performance this time around. We saw the margins improve from 14 to 17.7%, and in fact the company also said that they're quite optimistic about sustaining the upward trajectory that they've witnessed in FY25 as well. So overall, a good set of numbers for Patel Engineering as well.
Vamakshi, thanks a lot for all the stocks that you need to watch out for. And lastly, Nigel is joining in with cues from the F&O space. Nigel, good morning. You're finally back above 22,500. What's the setup looking like?
Well, that's right. You know, the last 1 week or so, Hormuz has been quite good. Just when there were calls for around 21,700, 21,500, well, the markets have surprised everyone, and that's the nature of the beast, right? 22,500 is where we're holding at. How are the FIs positioned? Well, they're still short on the index. 72% of their positions are on the short side. And in absolute terms, it's around 2.5 lakh contracts, which I keep telling our viewers that you need to adjust it because the lot size has changed. So effectively, it's 1.25 lakh contracts if you're plotting it on a longer time frame. So net short market, that's something you like, a glimmer of good news. And in fact, we could see those shorts scampering for cover. Two strikes I'm looking at, 22,400 as put as well as 22,500 call. On both those two, there's a fair bit of open interest build up out there, 40 lakh a piece. On the 22,400 put, well, there is signs of writing being seen. The premium has come down to around 75 rupees. And at the 22,500 call, well, the premium is around 130 rupees, which brings us to the levels. Just going by the options data, I'll give you a range, 22,325 on the downside, 22,650 on the upside. That's as per the options data. Near-term range is what you're looking at. On the downside, the 20 DMA becomes important, and then the 100 DMA, you don't want to see the 100 DMA getting breached, which is at around 22,000 odd. The Nifty Bank as well, the levels come up for you on the screen. The 48,250, that's the 20 DMA, and that's where we ended at. Reference point on the downside is 47,700, and if that breaks, then you're looking further deep at around the 100 DMA. On both the Nifty and Nifty Bank, you don't see that break. In fact, today you'll be keeping an eye on the Nifty Financial Services Index because it plays out the weekly expiry. Back to you.
Weekly expiry for the Financial Services Index. Thanks a lot, Nigel, for the F&O updates there. Time for a short break on Power Breakfast. Up next, we get you all the figures and details on India's banking sector report card for FY24. Stay tuned. Back on the other side. Back with us here on Power Breakfast. Now, the combined annual profit of India's banking sector has crossed 3 lakh crore rupees for the first time. Public sector banks reported a net profit of 1.41 lakh crore rupees in FY24. Sapna Das is here with more on the banking sector report card. Sapna, were these figures on expected lines?
Well, on expected lines. However, if you look at the public sector bank net profits, 1.41 lakh odd crore is as per the government data as of now. But our internal estimates indicate that the number could be slightly higher, 1.47 lakh odd crore. Having said that, the private sector banks, well, as per government data, they are at around 1.56 lakh crore worth of net profits in the last financial year. However, their growth rate has been much higher in terms of the profit making. So 80% for private sector banks, whereas our own homegrown public sector banks have grown by around 8%. Having said that, what are the reasons for this kind of a performance? Well, public sector banks have shown a massive decline in their net NPAs. This ratio is now around 0.74% last financial year. It's a major dip from the previous financial year, that is FY23. Second, they have also reported significant treasury gains. So both these factors put together, this had a major impact on the bottom lines. That has really helped the net profit, so to speak. In comparison, of course, the private sector bank's performance has been better because their lending has been more, and there are some other factors. What's going to hold back the PSBs, or what has been a drag kind of a thing, is that a lot of their recoveries are still stuck in NCLT, so that number could have been much better. But because of those recoveries being stuck, the pace has been slow. So overall, pace of net profits is not as high as was the expectation probably. Also, their operating expenses have been very high in Q4 of FY24. So going forward, somebody will have, we'll have to keep a watch on that. Last but not the least, we'll have to wait and watch and see, however, whether this number stops at 3 lakh crore plus, or it comes to around 3.15 lakh odd crore to 3.20 lakh odd crore, simply because some more private sector banks have yet to report their numbers.
Sapna Das with the updates there from the banking sector. But moving on now, diagnostics major Dr. Lal Path Labs has completed 75 years. Founded in 1949 by Dr. S.K. Lal, the company has grown into a leading player in the region. Shireen Bhan spoke to Arvind Lal and Om Prakash Panchanda, the men running the company for the last few decades. They asked if we can incentivize semiconductors or manufacturing in the country, then why not healthcare? Take a look.
I want to understand from both of you the experience of operating through the pandemic, through COVID times, but more importantly, the lessons that you continue to take away from the way that you managed to keep the business going, the way that you managed to reach out to consumers and continue to operate, function and deliver. What were the biggest lessons? I'll start with you, Dr. Lal.
So first of all, Shireen, I hope and pray that such lessons don't ever come up again. So it changed the way we think, it changed the way we work. And we worked 24/7, and our entire teams never went home to their houses. We hired hotels for their stay. We made other compartments in which we could do some pre-analytical work outside, etc. We made all those kind of things, and so much so that we were one of the first labs to be asked by ICMR to start testing. And in less than 2 years, we expanded that to 20 labs in India where we were doing the RT-PCR. And in the year 1921, I think, or 22, we did nearly 35 lakh RT-PCR tests. So we are capable of growing, but we don't
2021, you mean?
2021, yeah, 2021. And so we don't hope and pray that these times ever come again. But point is that people like Dr. Lal, we came up to those expectations. And we've done millions and literally crores of tests. So we are even in wellness now, if we can go and if the government gives us a little bit of help and they understand this is a kind of a...
What is the help that you need?
Well, they have got to incentivize the private people from going there, give them a special status, for example, which was given now, they're given to semiconductors, etc. Why not recognize healthcare as a good industry in which the government can help us? There's so many ways. I don't...
So is capital the constraint?
Not only capital, they should, it's a PPP kind of a model in which the government hospitals which are not up to it we can help them in setting it up or doing the test. It's a very kind of a deep kind of a thing, but it is possible that the government has never used the private arm which is the biggest. In private practice, we test or we look after more patients, nearly 70% of patients in India are seen by the private people. So this, we can share our experiences with the government and we can arrive at something, which is in between. That whatever they can do, let them do. Whatever they cannot do, you lean on the private people.
Interesting conversation there with the management of Dr. Lal. But time for a short break now. Up next, we get you cues from the commodity space. Stay tuned. We'll be right back. Welcome back, and on to the latest developments in the Israel-Hamas conflict. The chief prosecutor at the International Criminal Court has sought warrants for the arrest of Israeli Prime Minister Benjamin Netanyahu, Defense Minister Yoav Gallant for conducting war crimes and crimes against humanity. The prosecutor has also sought a warrant for the arrest of Hamas chief Yahya Sinwar and Hamas military wing commander Mohammad Deif for the crimes committed during Hamas's October 7th attacks on Israel. US President Joe Biden has sided with the Israeli Prime Minister, calling the request for a warrant against him to be outrageous. And as promised, Manisha Gupta now joins in with all the cues from the commodities space. Manisha, good morning. What are you picking up?
Morning, Hormuz. And while, of course, what you mentioned about Israel, there are concerns also about what has happened with the Iran president in sense of helicopter crash and the Middle East uncertainty. That really seems to be adding up in sense of a safe haven buying for gold and silver. Add to that the Saudi king health uncertainty also. So there is a lot that the markets are seeing happening within the Middle East, Israel, etc. And, we also are looking at the US dollar index declining a bit. The US data has been on the weaker side as well. So all of this tells you that the buying in gold and silver will just about continue. I mean, if Friday was anything to go by, Monday morning in Asia only seems to be adding to that. So you have the gold prices trading at an all-time highs of $24.40 an ounce, and silver prices are all-time highs in the Indian markets, trading above 90,000 rupees a kg. In the international markets, we are trading at around 13-year highs right now. Silver prices have gained up by 33% in this year until now, with the market still calling this as a buy market.
Still calling it a buy market after that rally. Manisha, thanks a lot for all the updates there from the commodity space. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward this Tuesday morning.